Coming up on today's episode.
Sometimes it can be really quick. You can escalate it depending. And it makes them be a bit more competitive against each other to keep loans.
100%.
So
especially because they know you're getting the call from a broker. So it's like, oh, shit, you might actually refinance them.
Oh,
so
yeah.
then all of a sudden they're kind of like, yeah, let me just see what I can do.
I even did it with my own one the few weeks
I
ago.
love it. Dodgy advice and bad decisions can cost you big in real estate. We're here to make sure that doesn't happen. Welcome to the No BS Real Estate Podcast. I'm your host, Jo Agresta, and it's time to take control of your property journey together.
I'm Kayla Wood from Millennial Finance Group, and I'm on the No BS Real Estate Podcast today, talking all things finance. Let's get into it.
Welcome back, everyone, to the No BS Real Estate Podcast, your listening how-to guide to the Aussie finance and real estate market. I'm your host, Jo Agresta. Now, today I'm joined by Kayla Wood from Millennial Finance Group. Kayla is a mortgage broker who started her career in banking before making the move into broking. And the big part of that shift was wanting to give clients more options instead of being limited to one bank's policy. And today's conversation is all about helping the buyers, homeowners and investors find more certainty when finance feels so uncertain, especially in the economy we're in. Because whether you're buying your first home, renewing or reviewing your current home loan, trying to refinance, maybe you're thinking about investing, or just wondering what your options actually are, finance can feel really confusing, intimidating, and honestly a little bit overwhelming. So today we're going to unpack what buyers should understand before they start looking, what homeowners should know before jumping straight into refinance, the difference between getting approved and structuring a loan properly, the difference between offsets, redraws, repricing, all those meanings and the things that you get confused about. And Kayla is the one that's going to unpack it with us. So Kayla, welcome to the show.
Thank you so much for having me.
I'm actually so excited because I had such a good chat with you when we caught up.
Yeah.
And I know Georgie was in the call as well, and we were having a really good chat. And then after she jumped off, I'm like, all right, no, let's really pull this apart. And I've been so excited for it. So you're a breath of fresh air because I love your approach.
Yeah,
and
thanks.
Sarah, of course. Well, Sarah was the one, Sarah Smith, she's responsible for putting us in touch. Yep. We're sitting here in Bendigo in the very interesting character lane of Pall Mall. So I'm very excited to be here, but we've had a lot of people pop in and out. So yeah, be aware of that, Kayla. I'm sorry.
Yeah, cool. No, that's cool.
I've organised all the performers today.
I'll give them a business card, see if they know.
That's it. So we always make opportunities, and this is when you know you're working with the right person. But I think the best place to start is, yourself. Like, tell us a little bit about, how you kind of came into this industry and, what made you make that shift because you were in banking.
Yeah, so I was in banking. I'd been in banking for a couple of years. We built our first home.
Mm-hmm.
I was doing a bit of lending at that stage, not too much. And obviously, first time, that was daunting, to say the least. It was COVID, so many things. But I was pregnant as well with my first child.
I actually don't know how you did that.
It was a lot, but we did it. But now the bank was very structured. Their policy, and that was the be all and end all. When I left, I was opened up to all the bank different policies, and it meant a lot of people that I had previously said no to, I could have said yes to. So it was really more time to help everyone instead of getting into that small box.
I think that's what stood out to me in our conversation was, the fact that you kind of are boxed into whatever the product that bank offers. Yeah. And it would suck to have to turn people away or say it's just not going to work for you.
Yes, and it did. And so hard. It's so hard in the bank to have that conversation with the client because you don't have the tools available to you when you're working in the bank to really guide them how to get to where they want to be.
Yes, it's not like a strategy kind of discussion.
Yeah, whereas now, absolutely I can. Like, I tell clients all the time, if this is not really what you want to do right now, let's turn this into a strategy and plan for 6 months down the road so we can look at it as a whole and get there.
I think that's the key. The key part that I find exciting about working with brokers is, you guys don't get paid till the end, which sucks for you guys. But but in saying that, for a consumer or like for a home buyer or even just a home owner, trying to assess, do they have the right bank? Is their mortgage with the right, lender? you kind of have that ability to unpack their finances and then set them up so they can achieve that goal. And that would be super rewarding.
Yeah, definitely. It's like, it's a lot, don't get me wrong, to try and go through that. Like, I just recently sat down with the couple at their kitchen table and went through everything that they're spending and went through and sort of said, we're tight. This is what we're going to do. This is our best option right now. So we've got this amount of time to sort everything out. Here's some things, let's discuss some stuff we're buying and work out whether we feel like it's necessary, or if we could maybe put that on the back burner for, say, 6 months and get back on track. And that's exactly what we did.
I think that's the hard part. It's the getting back on track.
Yeah. But everybody wants to get back on track. Like, right now, things are so uncertain, obviously. And everyone's feeling the pinch. Like, it doesn't matter who you are. Like, even if you're a millionaire, you're still going to be feeling the pinch because you're going to be paying way more in tax than everything else is going to be taxed now. Like, that's what we're all hearing. The media's blowing us into a big thing. So everyone wants to be on track and feeling like they can survive this wave. So it's just a matter of figuring out how to do it.
And doing it with the right broker or the right professional, I think, is key for that kind of success at the moment, because everyone's not. It is like the media has really pumped out the narrative that now it's impossible, now you can't do this, and all the people that didn't think about negative gearing are now thinking, oh, well, now I can't. And it's become really shit, you know, to have that message reiterated over and over. And my core belief's always been that, you know, if you want to buy property and you want to get value out of property, that you will be able to do it. It's just the strategy and the way you're going to do it now is different to the way everyone else did it. I can't speak for everyone else that's already adopted that strategy. I understand that frustration, absolutely. But it doesn't mean that it's now impossible for someone new to go, oh, now I can't do it.
Exactly. Everyone can do what they want to do. It's just about figuring out how. Yeah.
I think that's the key thing, is how do we get there? And that's what we're going to unpack today. And I think one of the things that I wanted to ask about was, you know, you've also crossed over into Millennial, like Millennial Finance Group. So, you know, you've moved different brokerages. Tell us a little bit about the work that you do with Millennial or how they operate.
So Millennial operate, like, they've got commercial, agri, and asset finance all in one. So it's like, for lack of a better word, one-stop shop.
Yeah.
Which is great because we can all work collaboratively. You know, a client that has business stuff, you can kind of work together with one of the other brokers and do the whole thing together. And it's sort of, it makes it easier to plan. Like, I can say in my experience that there's been times where a client will have a business loan and they won't know that it's secured to their house because they've done it directly, but they don't know it's actually secured to their house or anything like that. And then you go to sort out their home loan for them, and then suddenly that comes into play and you're like,
it's like,
okay, so that's another kettle of fish we got to figure out now.
Right. Oh, cool. Yeah, where'd that come from?
Pretty much. And it happens so often because, some things like that, when people go direct, sometimes it's not explained. Whether it's not explained or it's just the banker, I don't know, but it happens quite often. Yeah.
And I think it's like, you know, you go with a certain bank because of maybe it's historical. Like, I think there's that, oh, well, I've had everything through them since I was a teenager. I bought my first car finance through them.
Yeah.
That's who I'm going with.
I know my Dolomites account.
Correct. I know exactly. And I think that's the biggest thing. It's like habit. It's habitual. It's like, my biggest hang up, right, is I'll give you this. My partner and I, when we were applying for our home loan, like, we used a broker, and it was Bank of Melbourne is who we ended up with at the time. This was like 4 or 5 years ago. And then I was really annoyed because I don't like their mobile app. And I'm like, I know that's so dumb. My partner's like, oh, come on. I said, the mobile app shit. I appreciate good tech. CommBank's app's great. And she's like, CommBank's right shit. And I'm like, no, I agree with you, but I'm very annoyed about the app. And sometimes it's this habit of, just because I've grown with CommBank since I was 18, I don't want to move.
I actually know brokers who have gotten clawbacks because the loan is settled and the client doesn't like the bank app.
I'm not surprised.
Hasn't happened to me, thank goodness.
You're
but
like, no, I've navigated this. But
yeah,
it's true. It's like we've got these habits built into us. And I think when you work with a business like yourselves with Millennial Finance Group, like having the ability of everyone in one place. And I know that from just, you would know this from working in a bank environment, when you do have multiple departments working on one file, everyone coordinates.
Yes.
It's much easier, much faster
Yes.
to execute a problem or find a solution for a problem.
Yeah, and it's such a better experience for a client.
Yep. 100%.
So much better.
Yeah, because the last thing you want to do as a customer is jump around from one professional and then you've been referred and then you're now dealing with this person who then knows someone in debt consolidation and now you're kind of with three people to fix your finances.
Yeah.
And I think that's where that overwhelm kicks in.
Yeah.
And, with, and I was going to say, and then with you guys, I guess, what's the kind of, I guess, biggest thing that you kind of want to work with your clients? Is it a lot of like, there's a service you mentioned in our chat, and I can't remember if it was you or Georgie, but I loved it. And it was that you can call for guidance, like on, I think it was a refinance.
Oh, call for guidance.
It's like a hotline, or like, you'll help anyone when they contact you.
Oh, yeah.
To get that kind of guidance.
Yeah. So it would not matter if we were going to write a loan. If someone sent me a message on Instagram in 2 minutes, I would reply to them and try to help them. Whether we proceeded with anything,
anyone's guess.
Not my problem. Yeah. Well, not my problem. I would love to, obviously, but if they're just asking questions, like there's been on my Instagram, there's been a few people that have messaged me from some videos. They don't really want to do anything. They're just asking about rates, already speaking to another broker. And like one of them literally just reached out and said, my broker can get me this rate with CBA. Can you get me anything better? I said, what's the loan amount? What's the LVR? I'll do a quick pricing. Like it takes me 5 minutes to do.
Yeah.
Giving them peace of mind to proceed. Whether they come back to me in the future, who knows? But I've given them the information they want, just building that bit of rapport, which I've always been like that with any client. Like I'm happy to help no matter what.
Yeah, you want a guide.
Yeah. And I'd rather build the relationship. Like I'm not in it to just take the home loans. Like I want to help you, whether that's doing your home loan or not at the time. I'm going to help you no matter what. Yeah.
I think that's what I love about your attitude towards this, because, a lot of people kind of get like weary where the broker wants them kind of committed before they give that advice. And it's like, but at the end of the day, you're doing them a service. And I think when you start to kind of hide, like let's say you were in it for home loans, what you'll end up with is clawbacks.
Yes.
Which I don't think a lot of people realise listening what that means. Like, clawback, like in the simplest way, what is it?
So essentially as a broker, you get paid when a loan settles by the bank, and it's usually 45 days later, roughly. You'll get paid by that bank, which will be in your credit proposal. It'll tell you the amounts and everything. That'll get paid by the bank. If you refinance, pay your loan off, sell your house in the first 2 years, the bank takes that money back.
Yeah.
And you get nothing.
So shit.
It is. I don't think I have anything nice to really say.
No, and you probably don't have to. But I think the difference is, and what I've kind of, like the way I've been talking to you, and even the way Sarah kind of like explains, her experiences with yourself and clients, like if you're servicing that client after they've done their loan,
yes,
that is a key difference of why they might work with you for the next one.
And we absolutely do that. We pride ourselves on that say your loan settled tomorrow, you're still going to hear from us again. We're going to reach out to make sure your payment's gone through, that your interest rate hasn't jumped up substantially or something in a rate rise. The RBA increased the rate and suddenly your rate went up 0.5. We want to hear about it. We want to try to fix that for you so that you're not going to go directly to a bank and refinance it. Like if you're not happy and you don't want it, we want to be the ones that fix that for you.
Correct.
Rather than like, yes, okay, we wouldn't get paid on that, but we're helping you still and we're keeping that rapport. Like that's what
it's like you want that relationship long term. You're not there for 10 minutes to get a loan and move you on.
Yes.
And I think that brings me to, I guess, like today's topic. And before it gets away from me, I'm going to ask you for the notes again because I have not got mine here. I'm so dumb. But I think One thing that I want to make sure I cover is you've also, like, a Millennial Finance Group also has a very strong focus on community and supporting women in business. And I loved this conversation that we were having, and helping people like feel more confident around their finance options. How does that show up through the business? Like, how do you guys deliver that kind of help?
So we're very big in the community, a lot around Bendigo, obviously, and some other areas. We're getting a bit of traction in Shepparton now too.
Nice.
So we're currently putting on a coffee catch-up. In Queensland, they do the same thing. They do a big women's catch-up once a month. Everyone just comes together, has a coffee, has a chat. Everyone knows everyone. So you sort of have a connection. Say you suddenly have a question that you need a lawyer to answer. You have a connection that's a lawyer that you can ask the question to. It's more about building that community of people so you have someone to lean on if you just need something so tiny.
Yeah, it doesn't need to be this big
Yeah.
thing.
Yeah.
I love that. Like, you're getting together with like different areas of expertise are coming together. It's like you could be in any industry, but you guys, like, they're kind of facilitating that community vibe and that like a safe place for women to go to.
Everyone's welcome. It's just a coffee, just a chat. I have kids. The chance are I will drop them off and be just talking about how frustrating they were. Like, you know.
That's fair.
It's fair. Like, just whatever you feel like, just chat, small talk, get to know people.
I really love that there's a business out there that's focusing attention on it, especially in the finance space, like in facilitating.
There's not much around for women. Like,
there's not. Like, I think without,
it's a male-dominated industry. It always has been.
Yeah.
Deals get made on the golf course, so.
Well, this is our golf course now.
This is our new golf course.
Yeah, it's the coffee shop.
Coffee shop, quick catch up after school drop off.
And I swear we get a lot of shit done. We get a lot done. Yes. So no, but I just love that sense of community, of bringing people together and bringing women, in a place where it's safe to talk, it's safe to share your expertise, get that guidance that you need, or just have a quick question or a chin wag and bitch about whatever you need to.
Absolutely.
We need that outlet, and I think women in business in particular need a very big outlet.
Yes.
Because they're often the superhero behind being a mum, being the household runner, and then trying to be a business owner all at the same time. Yeah, exactly. It's like, that, what's that? Not meme, but they had it in the war. It's like that strong lady. Guy would know this.
Rosie Rivet.
There we go. I knew he knew it.
Sorry.
A quick pause. We'll be right back. Here's a word from one of our sponsors who supports the show. If traditional networking feels stiff and transactional, then Lux VIP is something completely different. Good food, good people, real connections, and genuinely fun events that stand out from the usual business crowd. If you want networking done differently, or just want to have a bit of fun and meet the right people that will help bolster your business forward, then come along to Lux VIP events. Talk to Steve McMiniman. His details are in the show notes below, and he's the one who runs Lux VIP events. Come and have fun with us. I'm part of the crew, and so are all or most of our guests. So come and have fun with us. We'll see you there. I always get away from my structure of my podcast, right? Okay. So now what I'm going to step into is our no BS statement of the day. Now, because you're new around these parts, basically we throw out a statement that is a little bit, we don't know which way it's going to go, so it's a bit spicy. And the point is that we want to come back to it at the end of the episode after we've unpacked everything and have you decide whether it's bullshit or not. All right, so today's statement is the best home loan is the one that gives you the most options, not just the lowest rate. So we're not going to answer that yet. We're going to come back at the end and we'll determine if that's true or false. So I guess the first thing that we need to kind of get into here is why lending feels so uncertain. Mm-hmm. I think this is a big topic at the moment, just after the budget announcement.
Yeah.
And is that what you're finding as well?
I think even before then, as the rates started to creep back up as well, because the rates started to creep back up, everything around different things the government's doing, all of that, like as it's sort of, look, I can tell you when there's an election coming up, things sort of go quiet. And it happens about a few weeks before you notice that people go quiet because they're not sure which way things are going to go, which is fair enough. But yeah, the fuel, the RBA, everything, like it's very uncertain at the minute with the way the media's portraying it all. for lack of another better word, this sort of fear-mongering.
No, it is fear-mongering. It's like preying on that
on the
insecurity
fear.
and the fear.
Look, don't get me wrong. I read it all. I see it all. I'm on one side of it, so I also can look at it with, understanding what things actually look like as well. But I can understand why that would, like, I have friends that call me asking questions.
Of course.
As soon as the budget dropped, I had 10 friends that have investment properties asking me questions. And I said, look, I haven't even looked yet. Can we talk about it in a couple of days?
They haven't even released all the details yet. So it's still like a little bit of a black box.
Yes, exactly. And I sat on a webinar the other day and they were explaining how most of it's not been passed. So, once again, like, we're putting this out to everyone right now and causing panic, really.
Yep.
And what are we hoping to achieve from that? Like, that's the part I don't understand. So
I think that's the part that everyone kind of struggles with, because like it's been a very turbulent kind of 12 to 18 months, like cost of living pressure, inflation going up, fuel, war. And then on top of that, now we've got this kind of like the budget announcement. And I feel like when you're watching the media kind of pump these things out, you start to see everyone, the cogs turn and go, well, what does that mean for me? How do I navigate this now?
Yep.
And that's where people, like, before they start, I guess, lending, like whether that's a refinance or about to buy a house, like are you finding that you're starting to see a pullback of buyers or not really?
No. So after the last rate rise, surprisingly, I'm seeing more buyers back in the game.
That's so interesting.
But prior, I found it was a little bit slower. But like even just this last week, like people making offers actually getting accepted, like even a little bit lower. So it's getting
traction.
Still going.
Yeah.
Whether that's actually representation of the houses that are being sold or not,
who knows?
Yeah, because that's just what I'm seeing. There's plenty of me around.
I think
so everyone could be different.
Sorry to intrude, but Kayla, could you project a bit more?
Sorry, put that closer.
Cutting a bit in and out.
Yeah.
Sorry.
I thought you were just scratching your beard hair at me, and I'm like, I really hate what you're doing. But now I get it. Sorry.
I'll move closer.
Because
I sort of just started going backwards because I'm just getting comfortable.
Yeah, good. I'm glad. I want you to be comfortable. But even if you're from back there, just project.
Yeah.
Okay. You can scream. It's fine.
You're in a woman.
Yeah. Let her out.
I am woman.
Hear me roar. I am
But coming back, I think, you said you love working with, and this is the interesting part, because we have a lot of first home buyers listening to this podcast, right? Mm-hmm. And you said you love working with them. So what is it that, or what do they usually feel most nervous or unsure about when they first come to you?
So in reality, the entire process.
Absolutely.
Because I find that first home buyers will have, asked a little question to a parent, a grandparent, an auntie, an uncle, a friend, and gotten teeny bits of information from all of that that's probably not relevant to them or not relevant to right now. So then basically we sit down, we have our initial conversation, which I try to make as informative as possible, but as specific to the stage that we're at. Yeah. So if we're looking for a pre-approval, it's really about borrowing capacity and deposit, and that's where we're at. I don't like to go into too much at once because it's too much information.
Yeah, it's a lot to unpack.
And I will sit there with a first home buyer on the phone at 8:00 at night on a Sunday. I'm absolutely happy to do that because I get it. Like, I was there once too. I had so many questions. I didn't know what I was doing. So I didn't know what, and I was building like it was so,
you're
like it's crazy.
You're pregnant, you're building, you're helping others.
But it's just, I try to be very specific on what stage we're at. So here's where we're at. We'll apply for pre-approval. Once we get the pre-approval, then I sort of go, okay, here's the next steps. And when we get to there, then we'll go over the next steps and just sort of
break it down.
Yeah, because if you try to explain, we'll get pre-approval, we'll get pre-approval, we'll get the application in, you make an offer, it's accepted, we need a conveyancer. we need to sign loan docs, we need evaluation, we need all these things to settle. Like all of that in one
blow
go for someone who's never done it before, it's too much.
And I think this is where then you start to see some buyers switch off and they don't buy their properties for months.
Yep.
And they're in and out of that market. They're getting pre-approval after pre-approval, you know, every 3 months at a time. And it's exhausting.
Yeah. And it's like, and it's a lot for them because at the same time, if we're redoing pre-approvals, their situation can't really change. They need to still be working all the days. If they, you know, we're going in to do another 3. Oh, I just found out I'm pregnant. That changes things. Like that's things
true.
like that. Like it happens and it's fine. Like we work around it, but you know, they kind of end up stuck. So it's sort of, especially obviously buyers agents are great with first home buyers. When we're looking just locally, I always suggest them to go into the real estate agent offices and meet some of the agents and get to know them, to say what you're looking for so that they'll call you.
See, that's interesting that I don't think a lot of people still advise on, right?
Yeah.
They are too hesitant or they've been told not to talk to real estate agents.
Yeah. And look, I can see every side of it.
Yeah, of course.
Like there's always going to be some bad ones in the industry.
Yep.
Any industry.
But any industry has good and bad apples, right? It's like there's shit brokers, there's great brokers.
Like I'll know an agent at one of the agencies and I'll suggest go speak to this one. If like I'll give them a call, give them a heads up that you're going to give them a call, have a chat, say, look, I'm already pre-approved. I'm looking for a house under this amount. We really want 3 bedrooms, 2 bathrooms.
Yeah.
Can you let me know when something comes up so we can have a look at it and go?
And there's no harm in it. Like I'm an ex-real estate agent. I did it for 6 years.
Yeah.
I tell you right now, like I knew my stock.
Yeah.
So I knew when I had a buyer that missed out on something, the first thing I would do if I got a new property on market, I'd call them and say, hey, you remember how you were looking for like that 3-bed, 2-bath in this pocket of the suburb?
Yeah.
I've got a new one coming to market. Do you want to come take a look?
Yeah.
And I think what we're noticing now is because of the real estate agents, funnily enough, are contacting a lot of the professionals at the moment looking for more buyers, right? But so they've got a lot of stock available, not enough buying power. And what I find interesting is when the market's really, really hot and the buyers are everywhere, the agents that are crap won't call you. You won't hear from them. They won't take your offer. You get ghosted. But the good agents will always think of you and still continue to work for you as if you're their client.
Yeah. And some of the best things I found with real estate agents is they want to sell to a local person, a first home buyer, because at the end of the day, when that person goes to sell their house, they've had a great experience with that agent. They're going to go back to that agent.
Correct.
And like that's the thing about being in small regional towns, like everybody knows everybody and you kind of build that rapport that way.
Oh, I found that today in Bendigo. I can't tell you how many people have walked past each other and just like they're good mates. It's like, what's going on? Like Sarah's been spoken to a few times and like I'm just looking around going, it's actually really cool to, you know, have that community vibe in a regional town like this and same like you're in Shep.
Yeah.
Like it's so nice to have that tight-knitness and you can basically rely on who you need to in your network. And
sorry, is someone shaking the side of the camera?
Yeah, I don't know. It feels like it and I'm like,
feeling it too. I don't know what it is. I felt it all day.
Yeah, I think it might be the wind sometimes when it's windy.
I was like, is someone like right there just trying to shake us?
It's just like shaken baby syndrome. No, hopefully not. This was
but the community here, I can't believe how many people know each other. Like Sarah knew the guy who had the dogs.
But like everyone's a fixture.
Yeah.
In the local community, it's like, oh yeah, there's the guy with the 2 dogs. They're always off lead, and I'm like, oh really? I'm like, yeah. If you came into the suburbs, the council would be here.
Yeah.
Because that's just the vibe.
Yeah.
And it's shit. I like the community tight-knitness.
It's nice.
It is. And I think, you know, I guess one thing I want to go back to is like before someone starts seriously looking at property, and this is where I always get frustrated, is, you know, when they're trying to make offers, what should they understand about their finance position first? Because I feel like you get your pre-approval and then you're either off to the races or you're scrambling for a pre-approval because you already found a house.
Yeah. So my suggestion would be to get your pre-approval, obviously through a broker like me.
Yeah. Bing.
My contact details will be at the bottom.
They actually will though.
through a broker like me, and then we'll also plan out exactly sort of what your max purchase price is going to be. So you're not going to look at a house that's $300,000 outside of where the max is going to be, because if you do, we're sort of scrambling to make it all work.
It's a nightmare.
But obviously, if you find something that's a bit more and you have a backup plan, mum and dad can lend you some money, gift you some money.
Yeah.
We can make it work, but we need to keep communicating.
Yeah, I think that's the key part, right? It's like you need to know, like I always say, property is the reward for finance work, right? So it's like, don't start with property, please, because when you start to look at properties and you start to look at your budget, it becomes unrealistic.
Yeah.
You start searching for a max budget of 800,000. You're like in this suburb, and you're like, great, I can buy all this property. Then you go to a broker. Then the broker tells you can only afford 700,000 at your top end. And then all of a sudden that suburb you were looking in at 900,000 is depressing when you start looking at properties in a different suburb at 700,000. When that was never where you were going to end up. In your financial position. It sets you up for this disappointing kind of journey, and it makes you think, oh, well, I can't enter the market. It's like, no, but you can. Your expectations are now warped.
Yes. Don't get me wrong though. I also like to sit on realestate.com and look at the $3 million houses in Sydney, and there's a lady that makes videos on Instagram, doom scrolling there, and talks about all the photos, and I love her stuff. It's so funny.
I love that we're in an age where now we won't even do the doom scrolling. We will watch someone else do the doom scrolling, and I feel like that's brilliant.
Yes, absolutely.
And this is the adult version, or the finance property version of when I see, like I know my cousins when they were kids, used to watch people playing video games.
And I'm like, my kids still do that.
And I'm like, what are you doing? Why? Just go play the game.
Exactly.
But that's us. We're like, why? Just go scroll realestate.com. No, we want to watch someone scroll realestate.com.
I do both, but I do like her comments on them. Like, she found one a few weeks ago. It was like this mansion, and it had this grand room, and she's like, oh, isn't the red carpet just lovely? And I was just in hysterics. I was like, that is hideous, but that's so much money.
Some of the properties you come across.
Yeah.
It's fun. It is fun to look at them.
It's an acquired taste.
It is. And unfortunately, when you're in this industry, it becomes an illness of our brain that we just want to talk about property.
Yeah.
We want to talk about finance.
Yeah.
It's like, because we don't have enough during our 9 to 5, we've got to do it all the time.
Yeah.
And
it becomes an obsession.
No, but actually. Because then when someone says, oh, yeah, no, I'm with CBA, it's like, why?
Yeah.
Why did you pick them? Did you have a broker? And then it becomes this consultation.
Yeah, 100%. I ask that question all the time. And then I'm like, but what? Like, do you know why? Like, do you have the reason as to why that was the reason that you went with it?
It's like, yeah, my broker said. It's like, why?
There would have been a reason.
It's like, the rate. Oh, okay.
Yeah.
And it's like same with us with Bank of Melbourne, although the app's still shit. Please fix it. If you hear this podcast, please. I want to use it. I had a battle with my partner for 6 months where I just could not get into this app.
Yeah.
The security. And
How long you had the loan for?
4 years. We'll have a chat.
Yeah.
Don't worry.
We're
due. We got weird structures too because we built. So
yes.
We've got 2 separate loans.
The land and the construction. Yeah.
Yeah, and we just never fixed it.
Yeah.
And now I'm paying 2 lots of interest rates and 2 loan repayments.
Yeah.
And I need to refinance. I know that. I've known it, but then where I'm complicated is I've got the business. And I'm like, cool, no one will lend to me. And I'm falling into the trap. Well, this is the thing. I'm falling into the same trap of what I always say to buyers is go talk to a broker.
Yeah.
But when I have, they're like, oh, but how much is the business turnover? And then I'm going through all of that and they're like, oh, it's probably not best to refinance right now. And I'm like, okay. So then I just put up with it.
Like actually looking at the figures or just like you say?
No, I think that's like not looking at the exact figures. They're kind of asking me like the general what is the turnover? I'll let them know. I won't broadcast on the podcast, but I'll let them know what that is. And they're like, okay. And how long have you been operating? And I'm like, 4 years. And they're like, okay. And they'll ask some other questions. I'll go, look, based on that, I don't know if you're going to be able to refinance, like, because of your situation with income in the household. Because my partner works full time as well. Yeah. But I'm the one that's got the business and the liability.
Yeah.
And that's where I think
I'll have a look at it for you because I think there's ways.
I reckon there's a follow-up to this podcast where, because I'd be comfortable with just going, no, fuck it, let's air it all out.
Let's do your whole scenario.
Yeah, let's do my scenario because I'm all into education. So provided my partner's cool with it, I'll air it out.
Absolutely. I'll bring my laptop and we can even do a screen.
I reckon a podcast caravan session, unpacking my finances and fixing my shit. I'll just show you what Kayla does. Yeah. And I'll go, right now, if she can or can't fix it, we're going to find out.
I'll find a way.
You find a way. But I like with brokers, like especially yourself though, there's always a plan around it. It's like, cool, you can't now, but you can in 6 months.
Yeah.
And this is what you need to do.
Yes. And I am very big on this might be my plan A.
Yeah.
But if plan A for whatever reason goes awry, like you had a bank account with that bank 10 years ago and it's been overdrawn $2 for 10 years and they've decided that they will never lend to you, I'm prepared for plan B. I've always got a plan B.
Well, brokers are there to tell the story
of
how to do this.
Yeah.
And it's like they're gonna present you in the best possible light to your lender or your potential lender.
Yeah.
So they're not there to undo you and go like a bad reference.
But we're also not there to judge. So it does not matter what you tell us. Say you, I don't know, were bankrupt 10 years ago. Just say it.
I think that's
I don't mind.
That's a big thing that I think a lot of people I'm always stressing is don't get hung up on like I said, I'm willing to lay out my situation. If someone's willing to give me some guidance or advice, I'm all ears because I don't want to live in that position if I don't need to.
Yeah.
It's like if someone says, hey, you got 2 loans, we can consolidate that and fix this little problem here by doing this and you'll have one rate. Oh, wow. Can you?
Yeah.
Oh, cool. Well, how do we do that?
Yeah.
Like this.
Yeah.
But a lot of it, like if I have to go back to my scenario, a lot of it is assumption. I'm like, it seems complicated when having a business that I own trying to go for finance. It just doesn't seem like the right move.
It's not complicated for a broker.
Yeah, in my mind it is.
You won't be my first self-employed client. You
That's
surely
true.
won't be my last. But there's ways around everything and there's ways to plan. It's nearly tax time. Like
that's the other thing.
A prime example. Last year's returns might not be pretty.
Yeah.
This time they will.
Yeah. Okay.
So, and it's okay, let's reconvene in August.
Yeah.
Like
there's always some way. And like that's actually like one of the questions I had. It's like, for you, but you've kind of answered it. It's like if someone's been told no by the bank, what should they do next?
Yeah. Well, my other thing with that is though, there's also, look, I do know that being at the bank, 9 times out of 10, if you went direct, they're probably not going to really tell you why.
Yeah, that's true.
I still suggest trying to find out if it's something on your credit score. Let's have a look. Let's fix it. Let's find a way. If it was literally you had a bank account with them 10 years ago and it's been overdrawn for an account fee for 10 years and you forgot to close it, these things happen. Some banks internally credit score. They'll never lend to you because of something silly like that. That's just their automatic system. And you know what? Oh, well, cross them off. Plenty more fish in the sea.
Yeah. I think that's the attitude. So like, getting told no can mentally feel like a blow.
Yeah.
And it's like, but when you've got a professional that's working, it's different. It's a different kind of blow. It's like, no, there'll be someone else. Don't stress. Yeah. And these are like your second tier finance lenders sometimes, not always your top tier.
I've had ones where one said no. I had one, what was it? The client kept their savings in their mum and dad's account. So they've transferred their savings into mum and dad's account every week. So did their partner into that same account. Mum and dad's names was on the account because that way they didn't see it. They didn't touch it. They were saving for their first home. Great. The bank wouldn't accept it.
Oh.
So in that scenario, that bank we originally went with wouldn't accept it because it was in their account. But if we transferred it back, it was in their account. Who accepts 1 day savings? CBA.
Oh, really?
So moved it straight to CBA, straight through. No problem.
See, there you go. It's all about the lender's policy.
Yes,
what are they willing to accept?
Yep.
And then all the risk that kind of comes with it, what they won't negotiate on or what they will.
Yeah, absolutely.
I love this. And I'm so excited to get into this next part because it's our Reddit Real Talk segment.
Yep.
Now, for those that are new listening and go, what is that? Well, what we do is you guys, and you can submit these through our Reddit community page or via email. You guys submit to us Reddit stories that you've either posted yourselves or you've seen, and then you want us to unpack it with a professional. And I can't believe this segment's been going for as long as it has, but I'm actually so happy that you guys love it. So today's Reddit Real Talk is we're going to unpack this with Kayla and we're going to get her impression. So this post is interesting and it reads, I'm struggling to pay my home loan. Is it possible to reset the loan term back to 30 years? And then they go on to say, I took out my mortgage 5 years ago and after 13 rate rises, I am struggling to pay back my debt. My loan term was for 30 years, so I have 25 years left. Can I talk to my bank to reset the loan term to 30 years? This should reduce my payments. I am 45 years old in full-time employment. Partner is part-time employment 2 to 3 days a week. I tried to figure it out on the bank's website, but still to no avail. It's so interesting to me. Okay, walk me through it. First impressions.
Okay, first impressions, you're not alone.
Mm-hmm.
This is a very common situation for people at the moment. There is definitely ways to do it. We can absolutely do it. It's just a matter of if nothing. So your income still supports it, and if we can do it, there are some lenders that are now doing 40-year loan terms. There's different things available. So it might be a matter of, okay, if it's right now you're struggling and 40-year loan term is going to suit you better, then that's what we're going to do right now. But when that situation comes up, I do like to have that conversation of, okay, but we want to try and get back to like 28 in 2 years' time. So plan around it is repayments might be reduced, you're going to pay a bit of interest, but can we get back to this later?
Yep, 100%.
Yeah.
I think that's key because when should existing homeowners be reviewing their home loan, like before they're under pressure or only once repayments start hurting?
Before, look, I would always suggest that people review their home loan 6 to 12 months. Just
Really?
rate review at least. Check in with your broker, ask if they can do a rate review. It's a, day or two turnaround. It's not a whole application. You don't need all your documents. It's literally send me the bank statement for the loan. We'll do a rate review. We'll let you know if we can get it down. That sort of stuff is important to do because sometimes you will, like if the rates suddenly come down and your rate doesn't come down as much as
the other one.
Yeah, then there's better options. Definitely look to review it fully every 2 years.
And that's like for refinance considerations.
Potentially, yeah. Just to essentially make sure you're still on the best possible rate. Your lender still suits your situation. So your situation might have changed. You might have gone self-employed in that 2 years. Anything could change. Just to make sure that that's a lender that's going to support you in what you're doing now.
I think that's a very big part of it too. It's like, and this is exactly what I'm probably going to end up talking to you about afterwards. So it's like, I'm hearing you, Kayla. I'm going to take the advice. But it's true. I think, refinancing is always an interesting one because there's the impression from a lot of your general buyers or, your homeowners that say, oh, that's because the bank they just refinance you for the sake of getting, a new commission or a new, thingo out of it. And I don't doubt that shit professionals that exist out there are 100% doing that for the sake of it, just to take the commission off someone else.
Yeah.
But at the same token, if it's genuinely to save you some money or have a better structure in place that's going to allow you to move around and do what you need to do, then, you got to see if it's right for you.
Yeah, 100%.
Not just, like I said, there are some good and bad apples. Just do your research. And this is why we have this podcast because we are a measure for who can you trust in this industry.
Yeah.
Who doesn't give you bullshit. That's why it's no bullshit. And I guess we hear a lot about refinancing, but, when someone, I guess, wants to lower their repayments, before they jump straight to a refinance. So one option is to call the broker. What other options do they kind of have, if there's anything?
So my suggestion will always be to reprice first, see if we can get the rate down with your current lender.
Yeah.
At the end of the day, if that's possible, great. If not, it can't be done. If depending on the lender as well, if you've got money in your offset, money in your redraw, there's certain things. If you've got money in your redraw, we can reach out and get them to reduce your actual loan amount so the repayments reduce.
Yeah.
Stuff like that. But it's very situational, really.
And circumstantial as well.
Absolutely.
I'm going to pause there. A quick pause. We'll be right back. Here's a word from one of our sponsors who supports the show. If you've ever considered investing commercially instead of residentially, then you need to have a chat with Michael Leipnick from Aston Constructions. Aston Constructions specialises in childcare as an investment strategy. They'll see through the project from development all the way to the end to renting it out. He works with investors looking for structured commercial opportunities beyond the standard residential path. If that's something you're exploring, his details are in the show notes below. Reach out and have a chat. So I guess you mentioned repricing. So can you explain that like in English, like when I say English, you know, layman's terms, like what does that mean?
So your current lender, we can go back to them and request a rate reduction. Sometimes we are successful, sometimes we're not. Like it's not always going to work. We will sort of try to do that automatically in the background for you regardless every 12 months just to, you know, we'll send you an email, be like, hey, we just repriced your loan. If it's one that we've settled and we've got all the details, obviously, but hey, we repriced your loan. We got the rate down, you know, 0.05. It's not huge, but it'll save you a little bit of money for right now.
Right. So it's like, it's not actually like having to move and reapply for a full refinance, which is involving a loan application.
Yeah.
Gotcha.
So it's just a quick thing that you can do in the background on one of the lender portals. And
that's so good.
Yeah. Sometimes it can be really quick. You can escalate it depending. And it makes them be a bit more competitive against each other to keep loans. 100%. So
especially because they know you're getting the call from a broker. So it's like, oh, shit, you might actually refinance them.
Oh,
so
yeah.
then all of a sudden they're kind of like, yeah, let me just see what I can do.
I even did it with my own one the few weeks ago. I was trying to, because our fixed rate was about to end and the rates were about to go up. And I was like, I want it fixed on the same rate. It's still available today. Get it done. I'm on the phone to them trying to do it. And I just set it up to throw it. I'm like, I am a broker. I've seen the email. This needs to be done today. I've already escalated it internally. Let's get this done. Yeah. So.
And you got it done.
I got it done.
Well done. I love this.
But
and I guess like if someone and it's like, don't impersonate a broker. Okay. Don't take that as a tip.
No, it was just more like he's saying these things and I'm like, I've seen the email, mate. Like, I'm one of you, basically. I see your things.
It's like, I see your shit.
Yeah, I get your emails.
And I love it because I guess if someone is struggling, like, you know, with their repayments, right, this is an important question because I feel like what should they do before things get worse?
So obviously reprice, definitely.
Yep.
See if we can get a better rate. If that's not possible, see if we can afford to refinance, if we're in the right position to actually do so, if stretching the loan term's going to give some breathing room.
Yeah, true.
If that's going to work, that's great. If you're not in your 60s and planning to retire in 10 years, what's 30 years? Like, it's really up to the client. But if that's going to free you to not be panicked, then great, let's do that. Obviously, client's choice, but it's an option. Look, at the last sort of resort, and there's nothing that can be done if we can't fix it at a lower rate that's going to, you know, provide certainty around it with the rates going up and down all the time. At least that way, then when you do go speak to them about potential hardship, if that's the road we're going to go down, you've exhausted all options beforehand.
That makes sense.
Yeah.
So it's like you're kind of doing it pragmatically.
Yeah.
I absolutely agree. And, you know, this next Reddit Real Talk that I've got is an interesting one, right? It's a loan structure, offset versus redraw, and why the lowest rate isn't the whole story.
Yeah.
So this one is titled Struggling to Understand the Benefits of Offset versus Redraw Account. This is so common. Even me and my partner went back and forth on this with our poor broker. I was like, I don't get it still. But now I do. But back then I remember being so like, Like, I don't understand. So this Redditor writes, I'm honestly embarrassed at this stage. I've never been super financially literate, but managed to put away enough money for a home with my partner. The mortgage broker is fantastic, but I've asked multiple times and still don't understand why one might be better. He said that an offset has the same effect as redraw, but we want to lower our principal loan so that when we refinance 2 years, so payments will be lower. What am I missing? I understand that the offset means I'll have more money liquid, but we have healthy savings and we'll be able to continue to add to them. So we don't need a large amount. We don't need large amounts of liquid. I like the way they wrote that. Isn't it more is it more advantageous to reduce the size of our loan directly?
So when you sent me this question, I actually thought a lot about it. They can do both. From the sounds of it, they've obviously got savings and extra repayments. So you can put the money in your redraw to reduce that amount that's borrowed and put your savings in your offset. It's going to reduce it more. You're only going to be paying down the principal.
Right. So you're saying it's not a one or the other option.
It doesn't have to be a one or the other. Like most loans that have an offset will have the ability to redraw as well. You can do both.
Yeah.
So if your savings are separately in an account, sit them in your offset it further and have your extra payments in the loan. Like you could do both.
Yeah.
And basically pay significantly less interest and pay it off a lot sooner.
So this is interesting because it's like, I guess, there's a key difference I feel in getting like a loan approval, right, in this way. And then you have all your little products like whether it's an offset and a redraw. And then there's a way that actually suits someone's life. Do you find that there is a difference with how you kind of go for loans at which lenders?
Yeah. So look, a client who's a first home buyer may or may not be necessarily, if they're not buying at the top of their capacity, they've got the potential to save money as well from the looks of everything. You sort of, hey, do you want an offset account as well?
Yeah.
Do you want to fix your loan? It's all these questions and it's sort of, whatever. It's everyone's got their own way they like to do things. Everyone does their banking differently. Like so many people read The Barefoot Investor. They do their money like that. Fair enough. Makes sense. Easy to read. Like it's fine. But like me, for example, I've now just completely changed mine in the last 3 months. My husband hates it, but it works better. Like I was like, it just makes more sense. Like, let's use the credit card for the points. We're paying all these bills. Pay them for the points.
Yeah, I think
put the money in the savings account.
I feel like there's like a call out though for people who can and can't use credit cards.
Yes, absolutely.
Like you said, for life, like this is where that lifestyle versus loan structure.
And like, trust me, 5 years ago, I could not have had a credit card. Like, can you imagine? I'm about to have a baby. I would have just blown through it that quickly.
Yeah, bought everything.
Yeah, but now like, our life's reasonably stable. I fix our home loan every time it comes due because I am too type A to go with the flow. I'd rather
you got to know what's going on.
Yeah. Like if I get an electricity bill and it's way the other way, I'm like,
oh, you sound like my partner.
Make this make sense.
You sound like my partner.
Why is this different now?
She had an alarm for me to turn off the heater the other day.
That's fair.
Yeah, she's like, I can't deal with another unpredictable bill.
Yeah, but that's just what I'm like. But now I thought one day, I was thinking about it for a while, but I never did it. And then I thought, let's do it this way.
Yeah.
And it just makes more sense for us. It just sort of goes one way. And then the home loan just sits there doing its own thing. Yeah. I'm not the kind of person who would use an offset, who would ever use the redraw. I'm just happy doing it on the fixed rate. When the fixed rate ends, there's money in savings. Yes, absolutely. I'll reduce my loan down.
Yeah.
It's not worth doing while it's fixed because most lenders have a cap.
Yeah.
So it's really circumstantial to who.
Yeah, who needs it and who doesn't.
How you do things, really.
It's interesting. I like the way you've kind of put it because it's like I think people just kind of chase rate and that's all they know to chase.
Mm-hmm.
And then when you're looking at it from the broker perspective, you're seeing so many things. You're seeing the way they spend, the way they behave with money, their relationship with, money. And it's like, okay, yeah, you getting a credit card is a no, or you getting a credit card could actually help you.
I would never suggest a credit card for anyone because, like, look, I was young. Like, I could have just
blown through it.
Imagine the things I could have bought. But, like, yeah, I get it. I would never suggest it for anyone. You have to be I don't know.
Disciplined.
You have to be in the, you've got your plan. But when it comes to your home loan and your offset and your redraw, it really depends on the client's situation, the way they spend their money and the way they do things.
And it makes a big difference.
Yeah.
And I guess like that exact thing, like, we hear these terms all the time. It's the offset, redraw, fixed versus variable, split loans. These terms get thrown around constantly. How do you explain a loan structure in a way that normal people can actually understand it?
So, look, my best way to try and explain it is usually drawing it into a picture for someone, because I feel like I get my point across better.
We might get you to actually draw it, and then I'll put it on the screen.
Your offset account is your account. The bank sees it as your money, not their money. Say your loan is $300,000, you've got $50,000 you've saved and put in your offset. You're only paying interest on $250,000 on your loan. So your principal amount is going to go down quicker because you're not paying interest on $50,000 of it.
Gotcha.
With your redraw, same sort of effect, but the money is in the loan and the bank sees it as their money. If you go to redraw the money, depending on the lender, they sometimes will hold a month's repayment, stuff like that, and you can't pull it all back out. So say I needed the $50,000 to go buy a car. You can only get 48.
Yeah.
That kind of thing. But it really, they're one in the same to a degree, but it depends. Some people don't like having a bunch of accounts. They don't like having offset accounts. They just want their home loan and that's it. Just do its own thing and put money into it. It's fine. Like everyone's different. Variable, the rate changes with the RBA. The bank can change it at any time too. Sometimes the banks might change it twice in a month and the RBA hasn't done anything in that time. Things like that happen. Fixed rates means that you're locked in for a term. There's fees to get out of it in that term. It provides certainty. I personally prefer it. That's because I'm me. I don't like change.
I'm me. That's probably the best way you could answer that.
Split loans it really depends on the situation. If you have your home loan, you want another loan to do something else, we can do a second split under your home loan for the other thing, so you know that that's what it's for. It's on the same rate, it's secured to your house. You can do a 30-year term. If you buy a house and you were like, well, hey, I want to do $50,000 as variable because I reckon I could pay that off in a year whilst I fix the other portion of my house, and that just does its own thing. I can probably pay that part out. Stuff like that. Like, it can be done.
And and going back to like today's theme of the episode, because I can't believe how fast the time's gone. I've had so much fun with you. Going back to that, like the core of the episode, it's such an uncertain time.
Mm-hmm.
These options that you've explained, you explained that really well too. And I am going to get you to draw a picture because I want to put it on screen.
Yeah.
But like, how do people that are feeling this way, like, at the moment, that are like, okay, this all sounds, great, but I don't know if it applies to me. How does that, how do I know?
Reach out, have a chat. Look, I'm happy to chat no matter what your situation. If we don't do anything, we don't do anything. It will be a nice chat. Like,
buy me coffee, it's fine.
But I'm happy to chat, work out whether things suit you, work out whether you're in the right situation, or if we need to see if we can get something better. It happens. Like, there's no such thing as wasting time. Because either way, I'm going to probably learn something from you. The situation's going to be different to the other person's situation I've seen. Like, no two people's situation is ever the same, which I do find that people don't understand. Oh, no, we work at the same job. Like, they got their home loan with this bank, but you're not the same people and you're not in the same situation.
Yeah, it's like whatever you put into that loan is different. How old you are is different. Like,
it's one of those things. And, and I don't think people fully understand that when it comes to lending.
I think that's the hard part. It's also the judgment, not being judged.
Yeah.
Like, it's a conversation. I always say it costs nothing to have a chat.
Absolutely.
Just ask the questions, because if you're able to, like, Kayla's made me so comfortable. I'm going to do a whole podcast with her unpacking my financial stuff.
Yeah, sounds good.
I think that'd be a really interesting one to take, to go through together, because it's hopefully going to help you guys learn too, like that. Just lay it out, see what happens.
If people want to send in some scenarios as well, we can 100%. Do stuff like that.
Yep.
Absolutely.
I'll put that out as a call out. If you don't feel comfortable to like identify yourself and say, I don't want to name who I am, no worries. Send your situation.
Yep.
Kayla will send you back some questions potentially.
Yep.
And then we'll unpack it and do like a personalised episode for you.
Absolutely.
Great idea. We'll do that next time. And I think, I guess, Hal, for for the people who already own a home and are thinking about upgrading, investing, or maybe using part of their equity, what's your final thoughts or a takeaway for them?
Definitely there's a lot that can be done. The conversation needs to start, and then you can understand where you're at, what we can do, what we can't do, get a valuation, the bank assess valuation, and see what sort of equity is there, what you want to do. If you want to buy an investment property, if you're wanting to buy an investment property with everything that's just happened, my suggestion is going to always be have a quick chat to your accountant first to understand what that looks like for you first, and then we can go from there.
And then the broker comes into it and works with your accountant.
It's very different.
Different structures. It depends how you've set it up. And that is a whole other episode, I can assure you.
Get an accountant would probably be a better one for that one.
That's true. But Kayla, thank you so much. I can't let you go without calling out our no BS statement. Mm-hmm. Okay, so we need to call it, and I'm curious. So the statement was that the best home loan is the one that gives you the most options, not just the lowest rate.
I agree. I think it's the home loan that you get to choose the home loan from a bunch of options to see what suits you best.
I love it. So we're going with no bullshit.
Yep, no bullshit.
Done. I get to live up to the name of the show. I don't even do it on purpose. I work so hard to figure that out. But, Kayla, once again, thank you so much for sharing all your wisdom and knowledge. You've been so much fun to have on the show, and I can't wait for another one with you.
Sounds great. Thank you for having me.
Of course. And for those of you always tuning in, thank you for listening to the podcast and supporting it. If you want to get in touch with Kayla, her details are on screen and in the show notes below. And as I always say, it costs nothing to have a chat. Pick up the phone, ask a question, DM her on Instagram. The details are also there. And, whether you're buying your first home, reviewing your current home loan, trying to refinance, whatever it is, have a conversation. Nothing to be afraid of. Thank you everyone for tuning in as usual. This is the No BS Real Estate Podcast. I'm your host, Joe Agresta, and we'll see you next time. Bye for now. That's a wrap for this episode of the No BS Real Estate Podcast, powered by Abodi AI. If you found this conversation helpful, don't forget to subscribe, leave a review, and share this episode with someone who might need it. If you're looking for more guidance on your home buying journey, you can visit www.abodi.com.au for expert advice, property insights, and the tools you need to find the right home with confidence. If you're already on your journey, you can also download our app. Just search Abodi AI on the App Store or Google Play. Have any questions or want to connect, you can follow us on Instagram at abodi.com.au or send us a message. We'd love to hear from you. Thanks for tuning in, and we'll catch you in the next episode.